Hello, my name is Bill and welcome to Mind Your Crypto. I'm going to tell you one bullish and one bearish scenario for BTC. Before we begin, I hope that you're having a fantastic weekend. Let's start. So after some panic right there on the market, after everyone tells their own story, because you go into the one YouTube channel, he's saying that he's bullish. You go to the other bearish, 13K, 17K, 25K targets, and so on. What is true right now and what is true about the short term? Okay, because we take this step by step. When I want to clear my mind out of all this and I want to just see a little bit the bigger picture, what I'm going to do is I'm going to the baseline. Okay, because here you're seeing the reds and the greens. You are moving this line whenever you want. Okay, if I want to move it right here, you can see the greens are getting smaller and the reds are getting bigger based on the support line, on the baseline. That's why it is called baseline you want. So right here, what I have is the 31.8 to 31.7K. This is the most important target right now for the short term. Now that we could manage to close above the 28.7K, it is very likely that we can go there. The problem right here with this is that it splits the chart into two parts. The first part is the bullish one, okay? And the second part is the bearish one. So what happens is, by the time you go there, if you find rejection and you get lower, then what you're going to have is that you're going to eventually find yourself into a difficult spot and BTC will be going further down. I want to go a little bit off the baseline and I want to go to the candlestick pattern right here. 31.7K, you can see it was also the support level back then on the bull market. Okay, so right here, what is going to happen? I'm going to the daily frame even. And what I think it will happen is that we are going to see the 31.8K, right? We are going to see eventually BTC going all the way up. Right now, what I would like to do is to draw two lines. The first one should be the Fibonacci retracement from the top back on 4th May to the bottom on 12th May. You can see in just 8 days, we went down like 33%. This is very bad for the Bitcoin. And the second Fibonacci retracement I would like to use is from 28 March towards the 12th May. You can see that what we are finding is the two lines, the 0.382 and the 0.236 of the previous Fibonacci retracement perfectly collide into the 31.788, okay, 0.7 to 0.8K. 31.7 to 0.8K is indeed a crazy support line. On the weekly frame, you can notice why. It is so crazy that really I do not know how we can end up going above. So I would tell you, based on that level, one bullish scenario, one bearish scenario. Before that, let's go to Ethereum against USDT chart on the 4-hour frame. What I believe here it will happen is that Ethereum will get even higher. A bull flag is very possible formation right here on the 4-hour frame for Ethereum, and we go towards the higher targets right now. So the next resistance level could be around 2.18, 2.2K around there. And of course, Ethereum could go even higher. Let's find some very short-term resistance levels. You can see that 2.2K is the next one according to the Fibonacci's. And we found rejection on the 0.5 because it was the 50% Fibonacci retracement in the short term. However, right now, I think that we can just move above the 20-day MA easier than we did back on those days. Because as long as we remain beyond the 20-day MA, we are still very bearish, right? You can see here and here as well. But I think that we have more chances right now into seeing a breakout and into having the 2.2K as the next resistance level for Ethereum. Okay, so basically for USD short positions right here, you can see that we are having a decrease in the short positions. We are still having many inflows on BTC, but at the same time, what is happening is that inflows of BTC into exchanges decrease. That is good, right? Because when we have many inflows, it's likely that we have a crazy dump, especially from from very bullish wallets like let's say 1000 Bitcoin and so on. Okay, it is very likely that we have a dump. However, right now, fortunately, we are dropping. So this is not the case. Okay, so we are going back to the bulls and the bears. If we find rejection on the 31.7 to 31.8k right here, and we cannot seem to go above, we seem to struggle, then worse days are going to come into crypto than the ones that already we have seen. So basically then the 24k, the 23k and so on is very, very possible. If I go to BTC USD, you will see that this changes a little bit. Okay, so in the BTC USD, we have different targets because USDT corrected against USD at the time that we were going down. So BTC against USDT was in a better position than BTC against USD. You can see that with USD we already touched the 25.3k, alright, which is a very, very important resistance support level because it was near the 50-day exponential moving average. You can see in the history of Bitcoin, if I go to the logarithmic scale as well, you will notice something, that right there we are holding mainly the 50-day MA. We might have gone a little bit down, but we are holding it and we go back up. And this is what the bullish scenario suggests. It suggests that first, we hold the 50-day MA, so this is very, very good. And secondly, it suggests that never in the history of Bitcoin, we have seen the low of a cycle touching the previous all-time high. Never, ever. Okay, so I imagine that if we take that into consideration for BTC, we are never going to see the 20k, right? Of course, having the recent historical data of BTC. I'm not doing any technical analysis right now, I'm just doing a price analysis based on historical data, based on facts. So we should be not touching the 20,000 Tether USD. Of course, every time in the history we corrected like 80% and more. This time if we correct 80%, that means we are going down to the 13,000 Tether USD. 13.7 actually to 14 would be the smallest, the minimal target that we could go, right? And though we would break the previous all-time high. So this is a little bit, I do not think that this could happen potentially. So the bullish scenario suggests that we already found a bottom. This is a bullish scenario right now, and this is something that crazy bullish could happen. At the end of the day though, I have always done this thing right here, the cipher pattern from the bottom to these 2 points and back to the D point. It is the 17.6k around there. It holds and we should be correcting towards this target. Okay, 17.6k should be the drop that we have, but this goes against the theory that BTC's low in a cycle never met the previous high. So right here we go against the historical data, we go against the facts, and we are going to break them. We go with the theory that right now we are going to see something that we have never seen in the history. So for now, I would say pay tons of attention to the 31.8k. If that's the case and we go there, then the best thing that we can do right there is that we go all the way upwards. This is the 31.8k is with the USD valuation as well, not with the USDT only. But with the USD, it goes a little bit around 31.8k and to the 32.2k. So I would have a rectangle for the BTC against USD. Okay, so this is what it is right now with BTC against USD and with all the data that we have until now. We are going to see the 31.8k and eventually after we are going to wait and see. In the meantime, BTC against USD is looking good into going even higher. Thank you for watching. Do not forget to join our monthly subscription and of course see you soon with many more videos. Bye.